Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, October 9th, 2019. And as you know, in the markets, we had the FOMC minutes today. The markets already digested it. The Fed, a number of members are concerned on the message that we're sending out with these rate cuts, and the market just keeps wanting more and more. At what point does the market say, hey, you don't need more and more? Number two thing, repo facility. The market is very aware that with what's going on, which is we keep issuing more debt. Bond dealers are forced, if they're going to be a bond dealer, to buy from that debt. Think of a jewelry sighting. Have you ever heard of that, where jewelers go to a diamond sighting and they're forced to buy from the beers what's in that bag? They may not like it. They got to bid on it and they have to buy something. Well, that's similar to what a bond dealer does. And then they take what they're buying, they go back, they borrow money, and then they're trying to sell it out into the public or whatever. They're bond dealers. They're not trying to hold on to it. So it goes back and forth with that. So the Fed is talking from part of that of building another repo facility to stop this tightness. The bigger problem is, as we keep expanding our debt, and as it approaches 100% of our GDP, what do you do with that down the road? And a lot of traders are going to have to worry about this. But in the meantime, the stock market, another rally, trade talks underway for tomorrow, and I'm going to admit here, I thought the Chinese would back out of showing up. When I saw yesterday 28 people and companies go onto a blacklist and then them throw American CIA and other people, which I can understand, going on it. But if you're in a human rights group that China doesn't like, you won't get a visa either. So there's a list that they're compiling. It's not out yet, but it's coming. And they've told us about it today. So I didn't think that the meetings would happen. The fact that they're going on is better than them not going on. And I admit, I didn't think that would take place. When you're looking at a weekly area chart of closes, as much as you look on price behind me and you say the market's up, it's actually for the week, and we're at Wednesday, we've got 2 days left, down 32 handles, as they call it. Under the 18-week average, the bias is still down. When I come to this chart here, I don't see what looks so bullish just yet. And when I watch financial TV, everybody's so friendly. I don't know that this market looks that friendly. I'd say that if you can get over this level, you negate the downtrend. You might even start another wave back into this area here. But right now, when I look at the market and I take a look at what's going on with my swing lines, I've got lower highs and lower lows. I don't know that this will be low or not. Let me tell you how the swing line works, part of it. It looks tomorrow to see, does the market clear today's high? Does it take out, today's low, have what could be called an inside day, take out neither, and then where would the close be to decide where to draw the line? Now, if it were an inside day, I make you a promise. You're going to get higher lows. The problem is you'd still have the lower highs without getting through this 29.59.5. So I think in the terms of the swing line, the bears are still controlling the market. Where is the market fighting its new battle? Why don't we come back here and take a look? As we were talking when this occurred last Thursday, nearly a week ago, maybe we would get to the 200-day average looking for support. We had sliced right through the 100-day average of closes. But when you slice through that number, when you reverse course and come back at it, and futures are obviously a lot different than stocks, but with the volatility, I look for that to be a potential resistance area. We made a big run, closed 29.51, 20 points over 29.31. Going, okay, well, if you keep going, then the 18-day average is the resistance, but typically you fight around that number. Lo and behold, this is Monday, October 7th, this is yesterday, and this is today. Tell me that we're not fighting that battle right there. You may not agree, but that's the game. Who's in control, at least going home tonight? The bears. You have lower highs, lower lows. The bias is down. You're going to see this number, 29.62, drop tomorrow, and it's probably going to get very close to this high the way that moving averages work. What about the Bollinger Band? We made a run at it yesterday. You bounced away from it today. 95% of the time, the market will stay within these black bands. You do get out of them, especially if you've had sideways action. That's how trends develop. Right now, that width of it tells me that I don't yet see a real lasting trend. What about momentum? I go there and say, okay, let's filter it. Does that look like to you like it's pointing up or down? I say it's just going flat. Not a surprise going into what we call trade talks. So what about the NASDAQ? Similar. Lower highs, lower lows. The market, do you disagree that it's fighting at this 100-day average of closes? So I'm going to say the trend is down. The bias is down because you're under that. What would turn the market bullish? Get over this 77.99, 75 and don't take out today's low. You'd have higher lows, higher highs over that number. So at least I know a number that can trigger the market, and if it wants to run, it might get back to there. What keeps the market bearish? Just not getting over that 77.99, 75. What about the Dow? Same pattern. Lower highs, lower lows, battleground, all of a sudden. What is that, 4 days now that the market on bounces comes back to this 100-day average and fighting there? What negates the downtrend? Different case here. If you take out 26,615, you'd have higher lows, higher highs, and the question is, where's that 18-day average of closes? Right now, it seems to be falling about 20 to 30 points a day. In fact, it was about 30 points a day right there. So if it drops tomorrow, it's going to be very, very close to wherever that high is my guess on it. Where's momentum? It's trying to arc up a little different than the others, but it's still caught at this 100-day average. I think these markets have more of a bearish bent to them than a bullish bent, but trading the trade talk, who knows where it goes. So far, how have they all ended up? Terrible. So I don't know what to expect here. In the Russell, this is still a bearish market. Look at these three moving averages. Now, what the market did today is a bearish setup. You've got the 18-day average under the 100, the 100's under the 200. So this market's got a cross that is ugly, as it's called. And that is going to offer, if we get up there, theoretically, some resistance area to the market. And to get bullish, it would take a lot of work. I've got to say that. So the bears are in control with lower highs, lower lows, or are they? Pause time. This is a higher low and lower highs. You've gone into a pause. Unlike the other markets, you're in an oversold, not embedded condition, danger zone. In the VIX, I had thought yesterday, if you got a follow through, that maybe, just maybe, the pros would try to sell some calls against that upper Bollinger Band. Now I don't know what they do. And the reason is, going into these trade reports, what if you do a whole trade deal? I'm not just talking apart. What if it's even bigger than we think? I don't think people take those kind of risks when these things come on. So I think VIX traders are very, very careful about that. We'll see what goes on. The trend is up. Higher lows, higher highs. Resistance is the upper Bollinger Band. You've got the support between the 18 and the 100-day. I don't like the fact that this market is close to overbought if it continues higher. However, if you were to get a failure in the market, momentum will turn down, but getting through these two numbers will not be an easy task. In the bond market, bonds have no trend. They have a lower low and a higher high. Now, you had an embedded reading right through here. You can see all the numbers. These numbers were over 80, over 80, over 80. That's all you need. Today, this is yesterday, by the way. Today, you lose that reading. The only time you can get back the bullish embedded reading is immediately on the next day. That's the theory that I have. It's my theory. I'm watching this. That often leads to price and the 18-day average coming together. So if there were a trade deal, would you think that'd be bullish or bearish on bonds? Well, I would think on the futures it would be a bit bearish. It gives the market a thrust where, hey, maybe there's a door opening like we did with Japan. So this market's a warning sign. At the minimum, it's saying, I think the pros got out of this market on the close. In the 10-year notes, when you reopen tonight, you're going to lose that embedded reading unless you were to jump higher, and I didn't see anything after the market to make that occur. The odds favor that. What's the pattern? Lower, low? No. You could argue that today, and I didn't put it on here, I could take another arrow, have it point up because you didn't take out 131.06. Take out 131.06, and that's 3 ticks from where you closed, and you have lower highs, lower low. You'd still be over the 18-day average neutral. I think traders are neutralizing their positions. In looking at TLT, here too I'm watching the embedded reading, and it was lost. That's a warning sign that prices might be headed back to the 18-day average. It all makes sense that traders that are betting on interest rates are flattening out their momentum in other parts. That doesn't mean they're right or wrong. I mean, you get no deal tomorrow and you could be right back up, right? I mean, no deal's not going to be favorable to the market. Will we get safe haven buying? Will we say the worst is yet to come? I don't know what's going to happen. In the dollar index, we have a clear pattern of lower highs, higher lows. The legacy is that we've had the higher lows and we've stayed over the 18-day average, so the trend is up and the bias is up. This is a warning sign, though. Take out 98.30, this market could be in a problem. Take out 98.95.5, I'd say that your next resistance area is right for the new highs that we made. You might make a contract high there. In the Eurocurrency, battleground is the 18-day average. I think I've been consistent in saying that. The market needs to get over 110.58 to get bullish and hold that, not getting back under 109.92.5. The bears, on the other hand, want to drive this market through today's lows and ideally through this last break low without getting over this high. Lower highs, lower lows, another failure at that number, setting up the potential for maybe getting to the lower Bollinger Band. All of this right tied to where these trade talks are right now. In the British pound, the market came down yesterday, challenged the Bollinger Band. It's down another 8 today, but it is in oversold territory, coming down. Interesting what the Scottish courts did. They pushed back their decision on the Benn Act, forcing the Prime Minister, Johnson, to October 21st. He's supposed to tell, by law, on October 19th, the European Union as to, if he doesn't have a plan, ask for an extension. That's what he's supposed to do. If he doesn't, the court waited 2 more days. They could have ruled today. It's just an interesting ploy on what's all that's going on there. Trying to figure this thing out, a nightmare as I see it. In the Japanese yen, you want to talk about a market that went back to the neutral zone, that 18-day average, you got it. Now, we have fought a battle coming into today for a bunch of days at the 100-day average, I think you'd agree that, and capped out at the upper Bollinger Band. Today you broke through, and for the first time you've got lower highs, lower lows. How much importance do I put it on it? None. And the reason I put none on it is with the settlement today at 93.38, yes, you're in a downtrend with everything down here. But what happens in this market is what scares me if there's no trade deal, because the market has been buying this as a safe haven. If there's a trade deal, well, what do you need the yen for? And that might be where the market comes down. So many mixed signals today. Bitcoin ended, as far as I'm concerned, this down leg. I think we had talked, be careful if you take out this high. Here you go. You lost the embedded reading, you did that. Now, what's next on the table? Possibly getting to that neutral number, that line in the sand at 89.33. But the market, people are going to look back and say, okay, the 7,500 zone, interesting number. The market seemed to have been able to grab some footing there. There's nothing bullish on the chart. You just lost the bearishness for the moment. Crude oil differential, Brent WTI, still in favor, as you can see, of the Brent oil. In looking at the market, you're still in the Brent itself with lower highs, but now higher lows. I'm going to call that neutral. Momentum oversold, trying to come up a little bit. So while the market's got the swing line down and the bias down, it's lost its way with the swing line because of the lower highs, higher lows. You've got to take out 57.37 to come down again. Now, there's an oil conference in London that's been going on, and a lot of traders seem to think that when we come back a year from now, we're going to be in this general price zone. I was reading how the speeches were going there. Fascinating. As we come to the WTI, you still can say lower highs, but again, higher lows. An oversold market that is what? It's not oversold, it's embedded. Both numbers are under 20, both under 20, both under 20. It's something like a broken record here. So until you lose that, the bears are controlling. It's different than the Brent. So this is a bit more bearish of a chart picture. Lose the embedded reading, even intraday, you might see some short covering resistance up at the 18 to 100-day average. But this is going to be a responsive market, as will Brent, to how these trade talks with China go. So be aware of that. In the gasoline, you ended your downtrend. The market actually started ending it when the market did this. Now you've got higher lows, higher highs. You're under the 18-day average. So the trend isn't up. The bias is down. The swing line is up and momentum pointing up here. And in nat gas, you're down, but I'm telling you, you've got that freeze coming. Be cautious here. You still have the embedded reading. If and when it's lost, look for a challenge into this area is the potential. But there's so much nat gas. We get a nat gas number early in the morning tomorrow. That'll tell us more of what's going on. And this market's not surprised. It knows about the cold weather coming, and it's not bouncing. I'm Ira Epstein. Enough said. I'll see you all tomorrow.